You rent out your apartment in Spain, the money hits your account, everything feels fine, and then someone casually asks whether you are filing Modelo 210, and suddenly you realize Spain might already be taxing that rental income whether you know it or not. This is where many owners start losing money, not because taxes are unusually high, but because they misunderstand who files what, when it is due, and which expenses they are actually allowed to deduct. My name is Hector, and I work with property owners who want to rent in Spain without turning a profitable property into a tax problem through simple mistakes. The issue is that Spain treats rental income very differently depending on whether you are a tax resident or a non-resident, and Form 210 sits right in the middle of that divide. People either ignore it completely, file it incorrectly, or mix up resident and non-resident rules, which is how penalties quietly appear long after the rent was already spent. Stay until the end, because once you understand exactly how Form 210 works, who must file it, and how residents declare rental income instead, you will stop guessing and start keeping more of what your property actually earns. Let us start with the most important distinction, because everything flows from this. If you are a non-resident for Spanish tax purposes and you rent out property located in Spain, you are subject to non-resident income tax on that rental income, and this is declared using Form 210. This applies whether you live in the US, the UK, Germany, or anywhere else, as long as Spain considers you a non-resident and the property is located on Spanish soil. Form 210 is not optional, not occasional, and not something you file only when you feel like it. It is a mandatory declaration of rental income, and it must be filed regularly as long as the property generates rent. Spain does not care whether the rent is paid monthly, seasonally, or through platforms, because the obligation exists the moment income is generated. The tax rate under Form 210 depends on where you are tax resident. If you are tax resident in another EU or EEA country, you benefit from a lower tax rate and, crucially, the right to deduct certain expenses. If you are resident outside the EU or EEA, the tax rate is higher and deductions are extremely limited or not allowed at all, which dramatically changes the profitability of the rental. This is where many people lose money unnecessarily. EU and EEA residents can deduct expenses directly related to the rental activity, such as mortgage interest, property management fees, repairs, maintenance, insurance, community fees, IBI, and garbage charges, as long as they are proportional to the rental period. Non-EU residents often pay tax on the gross rental income with little to no deduction, which can feel brutal if you did not plan for it. Form 210 is filed quarterly when the property is rented out. This means every 3 months you calculate the rental income received during that quarter, subtract allowable expenses if applicable, and pay the tax due. There is no annual consolidation for non-residents in the same way residents have, which means compliance is ongoing and repetitive. The filing deadlines are strict. Each quarter has its own submission window, and missing it triggers surcharges automatically. Spain does not send reminders, and platforms do not warn you, which is why people often fall behind without realizing it. Now let us contrast this with what happens if you are a Spanish tax resident, because this is where confusion explodes. If you are a resident, you do not use Form 210 for your rental income. Instead, rental income is declared in your annual income tax return as part of your overall taxable base. The rules, deductions, and tax rates are completely different, and quarterly filings under Form 210 do not apply in the same way. Residents can deduct a broader range of expenses, depreciation rules apply, and for long-term residential rentals, there may be significant reductions on the taxable portion of the net income. This is why mixing up resident and non-resident filing is not a small error, but a fundamental misclassification that can lead to audits and reassessments. Now let us talk about how Form 210 is actually filed, because this is where fear often replaces clarity. The form is filed online through the Spanish tax agency system. You declare the property details, the rental period, the income received, and the expenses if allowed, and the system calculates the tax due. Once submitted, you pay electronically or generate a payment document. The form itself is not conceptually complex, but it is unforgiving. Wrong periods, wrong property references, incorrect residency classification, or missing filings accumulate quickly. This is why many owners either use professional help or very carefully systematize their filings from the first rental month onward. The biggest mistake is thinking that short-term rentals are treated differently for tax purposes. From a tax declaration perspective, rental income is rental income, Whether it comes from a long-term tenant or a short-term stay, the obligation to declare it exists, and platforms sharing data with tax authorities have made invisibility a fantasy. Another costly mistake is assuming that paying tax in your home country replaces Spanish obligations. It does not. Spain taxes income generated from Spanish property, and any relief from double taxation is handled later through treaties, not by skipping Form 210. If you want to rent out property in Spain without losing money to taxes, the goal is not avoidance but accuracy. Know whether you are resident or non-resident. Know whether you can deduct expenses. Know your deadlines. And treat tax as part of the rental business, not an afterthought. When Form 210 is handled correctly, rental income remains predictable and manageable. When it is ignored or misunderstood, it becomes a slow leak that drains profitability through penalties and stress. The difference between those two outcomes is not cleverness or luck, but simply knowing which form applies to you and respecting the system Spain uses to tax property income. Because Spain will get its share either way, and the only real choice you have is how much chaos you allow along the way.